Hello traders, in this video, I'll show you the advanced and yet easy way to use the trend lines in your day trading strategy for stocks, cryptocurrency or forex. So stick around till the end of the video to understand the strategy. A trend line is probably the most fundamental tool for a technical trader, but it's usually misused or underutilized. They are simple to use and can be combined with other tools that you may already have. A trend line is a line that connects two or more lows or two or more highs with the lines extending into the future. Ideally, traders should look at these extended lines and trade on how price reacts around them, either trading a trendline bounce or trading a trendline break. Generally, we have three types of market trends, which includes a downtrend, uptrend, and sideways or ranging market. To identify a downtrend, you need the market to make successive lower highs and lower lows. To identify an uptrend, you need the market to make successive higher highs and higher lows. Lastly, a ranging market forms when you see the market only making highs and lows for a period of time. Let's go on our chart to do it practically. On this chart, you can observe the market was moving on the upward direction. Later it formed this last higher high at this point, and then it formed a lower high at this area followed by a lower low at this area. The market went ahead, forming a successive lower highs and lower lows, confirming a downtrend is in play. On this chart, we can observe the market was moving in a downward direction. Later it formed the last lower low at this point, and then after that, it formed a higher low at this point, and in the same time forming a higher high at this area. The market continued with the sequence of higher lows and higher highs, forming an uptrend. Lastly, on this other chart, we can see the market forming only highs and lows for some time, making a ranging or sideways market. To draw a trend line in an uptrend market, you need to connect at least two higher highs areas like in the chart below. To draw a trend line in a downtrend market, you need to connect at least two lower highs areas as shown below. So let's check on the common mistakes people do when they are drawing their trend lines. So the first common mistake people do in trendline drawing is trying to pinpoint exact levels with the trend line, and they will immediately enter into a trade, but most likely they will end up with losses. This usually happens because of the market taking out stop losses and also triggering breakout traders before it reverses and go in the trendline direction. The second mistake is when you look for trend lines everywhere in the market. Look for high probability setups and easy to spot trend lines with the good market reactions. Lastly, steep trend lines with no swings are usually not reliable. They will often fail and obviously won't show future reactions. Typically, more than one trend line will be in play at any given time. You could draw a number of trend lines, each displaying the price movement over a different time period. Trend lines with steep angles typically have a short life because prices cannot sustain a near vertical rise or fall for an extended period of time. Shallower trend lines are more stable and simple to keep. Drawing trend lines on multiple time frames like daily, 4-hourly or 1-hourly whenever possible can help new traders identify the overall trend, small trends, and corrections within those small trends. Buying or going long opportunities may arise during an uptrend when a short-term downtrend intersects the overall ascending trend line. Selling or shorting opportunities may arise during a downtrend when a short-term uptrend intersects the overall descending trend line. Trend lines that have been drawn must frequently be adjusted. Prices rarely move in a consistent manner for an extended period of time. This means that any trend acceleration or deceleration necessitates adjustments to the trend line. Keep an eye out for instances where the price breaks through your trend lines to determine whether they need to be adjusted. If the price falls below your trend line during an uptrend, you must adjust your line. When price moves above the trend line, the downtrend continues. Remember that adjusting a trend line does not imply that the trend has changed. An uptrend is defined by higher highs and lower lows, and it will continue to be an uptrend as long as this occurs. If you only use trend lines as a guide, you don't have to worry about drawing trend lines along exact highs and lows. Draw best fit trend lines which provide visual clues about potential trade areas. Drawing trend lines along extreme highs and lows work in some cases, but when it doesn't, draw trend lines of best fit. Because the trend line isn't used as a specific trade signal, rough trend lines can provide you with useful information about the trend without requiring you to constantly readjust it. Trend lines are excellent tools for highlighting short-term trends within a larger trend. Pay attention to price action and keep it in mind when using trend lines. Even if the price moves above a descending trend line, the price is still in a downtrend if it makes lower lows and lower highs. Even if the price falls below the trend line, the price is still in an uptrend if it makes higher highs and lower lows. So we will check on major two trendline trading strategies, which are trendline reversal strategy and trendline breakout strategy. So how do we choose between the two strategies? If you are an aggressive trader, then maybe you are best suited to trading trendline breakouts because they allow you to get on board at the very start of market movements. However, if you are more of a conservative trader who is looking to take small chunks from within the middle of moves, then maybe a reversal strategy is best for you. Let's get on our chart and see how we can trade with the trend lines. First, we need to go on a higher time frame chart to check on the major trend of the market. And in this case, we'll use the daily time frame chart. On this chart, we can see the market is on an uptrend because it's forming higher highs and higher lows, as we had discussed earlier. When we draw a horizontal support and resistance level by joining these 2 points, we get an area of confluence at this point. This is a good level to watch because price is likely to reverse from this area easily than other areas. To enter into a trade, we need to analyze a lower time frame chart, and in this case, we'll go down to this 4-hourly chart. On this chart, we can now see a clear picture on where the market is rejecting the upward trend line. We can observe initially the market was moving up and down with the major trend, which is an uptrend. When it reached at this point, it made a higher high, but later it failed to make another higher high, but made a higher low at this point. We had a move down, then a pullback, again a move down, then a pullback, and lastly another move down, then a pullback, but in this case, the market failed to make a lower low. This signals that the minor downtrend was about to end, so we wait the market to break the previous lower high area, which is here, to confirm an uptrend is in place. As an aggressive trader, you can enter on the breakout, but remember, we have a horizontal support and resistance area above. To be conservative and reduce risk, we can enter into a trade after breaking the horizontal SNR level, and when you get a pullback to the level, an area of confluence, this gives us a good opportunity. We take a trade with a suggestive candlestick pattern, and in our case, we have an engulfing bullish candlestick pattern forming at this area of confluence. We go long, putting our stop loss just below this previous swing area and target a 1 to 2 risk to reward ratio. This trendline trading strategy can be very reliable if you incorporate price action knowledge and not just taking trades blindly every time the market gets to a trendline area. So watch my video on the moving average trading strategy that top traders use to get more profitable in a trading journey. If this video has been helpful, remember to like, share and subscribe to the channel for more future content like this. Till next time, see you.